You know, when people think about their retirement and what it's going to cost, there are many things that come to mind. How much money you need to save, maybe healthcare costs, a big factor, or inflation. And while those are all very important, well, we have guests today that warn about something totally different that could be your largest expense in retirement. Joining us today, Gary Mattson, Taylor Stewart, part of the family at Mattson Financial Services, a firm that's been helping people retire successfully right here in West Michigan for decades. You can also catch them on their popular radio show, Money Mentors. Gary, Taylor, what do you think the most important thing to consider for those nearing retirement? What should they be focused on right now?
Well, healthcare definitely is a big one, right? Especially if you're retiring pre-Medicare age, so that definitely something needs to be talked about, inflation, all those other factors. But one of the biggest ones in a misconception sometimes is taxes, right? A lot of people that I'll meet with every now and then will say, hey, you know, I have to pay taxes on this 401k. It says, yeah, it's not a raw 401k. This is all pre-tax money. So you've been saving all this money and kicking that tax can down the road. And then in retirement, we're slapped with that tax bill. And depending on what your living needs are, we may be in a higher tax bracket in retirement than what we are when we're working.
Oh,
right?
my. I got to stop you there. I mean, to enter retirement and to realize that now you're paying even more taxes because you did what you were supposed to do, which was save a lot of money for retirement so you could just, you know, live the easy life, right?
Yep.
And now you've got this big tax bill, this tax bomb pretty much ticking at the end of this road. Yeah. That's got to be highly surprising. Do you find, Gary, that people are surprised?
Well, not only they're surprised that they don't think they can do anything about it. And so what we do is we sit down with them, look at the avenue of where they're holding their assets, how they're holding assets, and then take advantage of different strategies that you can do to actually lower that tax bill. People look at that and they say, well, gee, I've got my Social Security coming in and I got a little pension coming in. I'm comfortable. Maybe I don't need any money. Well, the problem lies is that your Social Security benefits are going to be taxable event too. So we have all these layers of taxes that we have to deal with from the federal government and the state of Michigan. And if you do it incorrectly, you could find yourself paying taxes much more than you should be. We had clients actually do that, found out they were paying taxes on money they weren't even using. The government's taking the first bite and they're not even using it. So having a tax structure set up, as Taylor was saying, having the right tax buckets, tax-free, tax-deferred, and of course taxable, utilizing those strategies, we generally can get you saving the taxes 2, 3, maybe 4%.
I can't imagine someone coming to that realization. It's got to be a sad day. So people, successful savers, we call them, right? People who've really put away a lot of money for their retirement. These tax breaks sometimes feel that it's something that only the wealthy, can kind of take advantage of. Can you speak to that? Is it something, anybody can take this, but they just need the info, right?
I think the biggest thing is you need that guidance. You need that trusted person to work with to get that information. And typically, like you had mentioned, the wealthy, right? They've got a team of CPAs and financial advisors, and so they've got those people doing the work. If you're that blue collar middle class millionaire just going to work every single day and you don't have that team when it comes to retirement, if you would have started years ago and working with that fiduciary financial advisor and partnering with that CPA and maybe even an estate planning attorney for passing those dollars on in the future, because we're talking about taxes today on your income, right? But if you've been a successful saver and you're going to leave money behind for kids, grandkids, charities, and that type of thing, well, they may be looking at a tax bomb as well. So you're kicking that tax bomb down the road to the kids, which most people, that's not what they want either, right? So the good news is, out of all of that, this sounds pretty doom and gloom, is you can control it. So working with that fiduciary financial advisor, working with that CPA, and if you don't have one, taking that first step to getting that taken care of, there's a lot of things that we can adjust to help reduce that moving forward.
Okay, reduction is good, Gary. How much reduction are we talking about? How much tax savings can we get out of this?
Well, the real thing to understand is that in retirement, we have something called required minimum distributions. So if you're going down the road, and let's say you've got $1 million and you've done well, and now it's worth $2 million 20, 30 years down the road, that required minimum distribution goes up as you get older. So you could be in your late 80s, early 90s, having to pull out 7, 8, 9%, putting you in the highest tax bracket, 30, 40%. So we can actually do things about that now. Relieve that tax bill by structuring it so we can move money from an IRA to a Roth IRA, make it tax exempt. And then get rid of about 30, 40% of that number. So it's a huge number.
That is a big number, Gary.
It is a big number.
Yeah, that is. And of course, when you transfer that, you're paying those taxes now. Taxes aren't going to go anywhere but up, right? I remembered when taxes really went down consistently. They always seem to go back up.
And of course, they sunset in 2025 right now, and we have a new bill coming in. I mean, let's face it, we know taxes are going to go up. So you better take advantage of what you can now and also look for the future.
All right, so what can we do? What's the first step, Gary?
Well, if you've saved at least $500,000 or more for retirement, then we want to sit down with you and do a tax review. If you're in retirement, getting ready to retire, you really want to understand what taxes that you're obligated to pay and where there's a relief for you. And relief can happen every single year. So it's not just a one-time thing. You want your advisor and your tax strategy put together so it's working for you every single year and have that review. Because let's face it, what happens every year? They change taxes.
Yeah, the tax code changes every year, doesn't it? So it's so good to have trusted advisors such as yourself that you guys are experts in the field. We can just give you a call. So let's do that now. It's a great offer, by the way. There's a great offer waiting for you if you're at home. If you want to see what kind of retirement tax bill you might be facing and probably some good ways to potentially reduce or even eliminate that, take advantage of this special offer from Mattson Financial. Gary, Taylor, the team are going to sit down with you, do a complete evaluation of your financial outlook, develop a comprehensive retirement plan to get you where you deserve to be, living your dream retirement. Remember, this is especially important for those who have saved well, or even business owners. So if that's you, don't let the offer pass. It's available complimentary to the first 5 callers today. Secure that spot now. Call 616-514-3831. That number again, 616-514-3831.